Will auto and housing collapse? Give Fed an inflation-fighting weapon of death? Former Russian President Dmitry tweeted his predictions for 2023. Some of them I find epically absurd. Number 1, oil price will rise to $150 per barrel. Number 2, the EU will collapse after the UK's return. The euro will drop out of use as the former European currency. Number 3, civil war will break out in the US. California and Texas becoming independent states as a result. Elon Musk will win the presidential election. Number 4, all the largest stock markets and financial activity will leave the US and Europe and move to Asia. Number 5, dollar will stop circulating as global reserve currency. Obviously, he is betting on oil price, which is betting on higher inflation. But are we heading into more inflation shock next year? What about the Powell's powerful tools? Will auto and housing collapse? Give Fed an inflation-fighting weapon of death. I will explain it all right after this. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these topics, you are intelligent. That's why you're here, and you know what to do. And push my button if you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a good boy, go to patreon.com/magicalgoddesscheryl to add more meaning into your life. If you play your cards right and completely submit like my good boys do, then I will take you under my wing. Author of best-selling books, Goddess Cheryl. My good boys always get rewarded handsomely. You are such a good boy. You like hearing that, don't you? You want to get into the bookstore. You want it to be real. You want it to be true. You need to be my client, don't you? Elon Musk said that those are definitely the most absurd predictions, and said they demonstrate an astonishing lack of awareness of the progress of artificial intelligence and sustainable energy. Musk added, "Remind me of this in 1 year." Meanwhile, Elon Tesla shares lost another 11% on Tuesday. It has crashed 74% from the top. One major factor hurting the stock is growing concern of an economic recession in 2023 and higher interest rates, which makes auto sector crumble. The Federal Reserve's interest rate increases have brought on a housing slump as severe by some metrics as that of 2007 to 2009, inflicting pain on prospective buyers, homeowners, builders, and other industries linked to real estate. For the Fed, this is a feature, not a bug. Slumping housing could help deliver the lower economic activity and inflation that the Fed wants in the coming year. The lockdown that hit the US in March 2020 delivered an unexpected housing boom, driven by working from home. Americans' desire for more space and the Fed slashing interest rates to near zero. In the ensuing recovery, job growth fueled household formation as younger adults sought to live alone rather than with roommates or their parents. The result, housing construction soared. The S&P CoreLogic Case-Shiller National Home Price Index leapt 45% from January 2020 to June 2022. Apartment rents also climbed sharply. caught off guard by the strength and persistence of inflation. The Fed reversed course in 2022, raising rates 7 times to between 4.25% and 4.5%. The average 30-year fixed-rate mortgage jumped from around 4% in March to 7% this past fall. It recently eased back to 6.3%. The monthly mortgage payment on a home at the median U.S. price was up 43% in November from the start of the year, according to the Mortgage Bankers Association. Higher interest rates check inflation by curbing spending, hiring, and investment. The rate-sensitive housing sector is usually the first to feel this. But the speed and the severity this year has stunned long-time market participants. This is the worst rate shock I've ever seen by a mile, said Lou Barnes, a third-generation mortgage banker who entered the lending business in 1978. He warned that the full effects have yet to be felt. Buyers have retreated to the sidelines, while sellers who have locked in a low interest rate have less reason to sell. Sales of existing homes fell in November for the record 10th straight month. Economists at Fannie Mae and Goldman Sachs forecast they will drop below 4 million in 2023, lower than during the 2006 to 2011 housing bust. Rent growth has also slowed as the household formation boom of the last 2 years appears to have ended, and the supply of new apartment units hits a 40-year high. Housing demand can grow because of increases in population or because new households are formed. Census Bureau information shows that the share of one-person households surged after the world crisis, likely reflecting behavioral changes as opposed to population growth, said Thomas, an independent housing economist. He estimated that if the share of households as a percentage of the population had been constant from 2021 to 2022, household growth would have been half as large as shown by Census Bureau figures. If that surge proves to be a lockdown-related anomaly, household formation could be set for a bigger drop. The cost to form a new household has gone up a whole lot, said Mr. Lawler. In my mind, it would be shocking if household growth actually hasn't slowed dramatically. Typically, demand for rental housing rises in late spring when college students graduate, but that didn't happen this year, according to Jay Parsons, a housing economist at rental software company. We've never seen a period like this, where we've had so much job growth but so little demand for any type of housing, he said. The demand unleashed by the lockdown pulled forward. Demand from the future, he said. In November, single-family housing starts hit their lowest since the early months of the lockdown, while higher borrowing costs are chilling new apartment investment. Anyone in the residential development business for sale, for rent, is at a stop for right now, said Rick Campo, a Houston-based owner of 58,000 apartment units. A housing slowdown could also crimp demand for appliances, renovations, and moving services, among other businesses. Dan Neufeld, who runs landscaping with his father, realized by June that the phone had stopped ringing. We looked at each other and said, "My God, what is happening? We should have way more estimates and appointments," said Mr. Neufeld. He figures that the boom in patio installations that his company enjoyed during the lockdown bubble 2020 and 2021 were two of his best years, brought forward sales that might have occurred in later years. Right now, no one is pulling the trigger on a $20,000 or $30,000 patio renovation, said Mr. Neufeld. All of this could have powerful effects on inflation. Inflation was initially driven up by prices for such things as autos and furniture. Russia's invasion of Ukraine this year further boosted prices for food, energy, and other commodities. Housing also contributed with a lag as rents and home prices soared. Housing accounts for a third of the consumer price index and a sixth of the personal consumption expenditures price index, which the Fed targets. With housing prices now falling and rents growing much more slowly, shelter's contribution to inflation could fall sharply in the coming year. It is the one reason Fed officials project inflation will slow to 3.1% at the end of next year from around 6% now. Fed officials aren't sure that is enough to bring inflation durable down to their 2% target. They worry that growing incomes could sustain consumer spending in ways that allow companies to keep passing along higher prices. Mr. Campo is sympathetic to Fed officials' worry about wages. While Camden Property Trust's share prices have fallen 37% this year. The company is coming off one of its best ever years, and his employees, with rising bills of their own, are expecting bigger pay raises. They can expecting, but it doesn't mean they will get it. Some might get it, some might lose their job because of it. Because once stock market, Dow, figure out recession is coming, the epic crash will get people fired. Just as tech sector's 2022 layoff, 2023 will be the industrial and retail layoffs. Powell has supposedly good employment market. Well, that's suspicious. The unemployment rate is at 3.7%. And there are a lot of job openings, which gives the Fed cover to fight inflation. By a mild recession, Powell means the unemployment rate goes up to 4%. If it rises to that level, I think he can continue with the inflation fighting. But what if the unemployment rate goes up to 8%? Then what? We know exactly what's going to happen. In the coming deep recession, the U.S. is going to go on a much more aggressive round of free money. And this is my client Teddy Eazzy's book, Wicked Pussy Perfume. It is an erotic novel, such an awesome book. And my clients David, Vine, and Jama, Ignite the Passion, Co-Create Your Dreams book. Such an amazing book. And my book, Time. You are such a good boy for watching my video right till the end. Bye.